All right. I guess we're gonna start going. Good evening, everybody. Welcome in. Welcome to the charting session on Sunday, 7 p.m. Eastern. So pretty much, yeah, this is a very casual charting with the boys, with the gang, right? We're gonna start off with some indices, move over to some metals, and then after that, we're gonna go into some forex pairs, right? So the point of this entire charting session is to identify points of interest, right? So we're going to identify points of interest that have higher probabilities for our trades to be successful due to the fact that there is a large amount of liquidity, a large amount of funds inside that point of interest. We're going to start from the daily, move down to 4 hour, move down to 1 hour, and then move down into our entries to see if they're pretty decent entries for us, right? So we're going to start off with NQ. I have to clean up the NQ charts a little bit. I've also added an indicator. Wow, yeah, my charts are a little messy right now because a lot of movement this past week. I also added the midnight open. Midnight open should also help us determine whether we are going bias for bullish or for bearish movement, depending on how the midnight open opens for us and how price action reacts to that. So we'll be looking at the daily candles right now. Let me clean this up a little bit for you guys. Let me get these out. Trend line, my trend line is still bearish. Let me move this a little bit. Which is great for us, right? So last week we identified 2 points of interest. We identified this weekly fair value gap and this daily fair value gap that was overlapped over here. Let me show it to you guys. So this was last week. Let me remove that. This right here, that was a 50% of right here to here. And that actually did get hit. That weekly fair value gap got hit right over here. So let's remove that since that's already been mitigated. We identified that as a point of interest for us. So the only thing is that was some crazy movement right there. That's been mitigated. I'm gonna remove these. So I identified these as points of interest as well. That was on the daily. Let's look at that real quick. Has that been mitigated? Dun, dun, dun. Yeah, let's just clean up the charts. Let me clean this up for you guys. I was hunting some positions down there. NQ's been moving like crazy. Alright guys, so sharing with y'all right now. Oh, that's beautiful. I didn't even know I'd hit it over here. So we identified last week a great point of interest for us is going to be this monthly fair value gap that's right over here. Monthly fair value gap is located at 137.67.23, as you can see right here in the charts. Hopefully you all have it marked up from last week and you also set an alert, meaning that once it gets to that point, which is a really high time frame, right? You're talking about monthly time frame. If it hits that, that's a great opportunity for some kind of movement to happen. So it's either going to break through that violently or it's going to be rejected off it and continue going back up. Right now we have a double top pattern forming on the monthly time frame. So you have an M pattern right over here, but you have your monthly fair value gap right over here as well. So looks like it's going up and then it's going to refuel, right? So whenever we're looking into like liquidity pools, I like to see like as refueling, right? So it's either the rocket taking off or the rocket, you know, just fucking heading straight into the ground, right? If it's fueling at the top. But whenever you have a huge movement, a massive movement, strong displacement, you need some liquidity. You need something to fuel it on the way there, right? So in order for this to break through this right over here, through this liquidity, this buy side liquidity needs to pick up a little bit more liquidity from over here. So it's going to pick up that and then just fucking break through here. That's in theory, right? That's in a perfect world. So that's what we're looking for. Being at it as it is in a higher time frame, a monthly time frame, I am pretty confident that it will fulfill that. So let's hope that happens. Also, remember, since we are working on a higher time frame, that's going to be a little bit wider when it comes to the stop losses. So that's why we identify areas, points of interest in lower time frames when it comes to that. So monthly time frame, that's identified. We're going to start looking at the daily. We're going to start looking at the 4 hour, and then we're going to go into 1 hour and then entry. Entry time frames, I like to stick to 5 minute, 15 minute. I like 15 minute, there's less noise, but sometimes you get some really nice entries on the 5 minute, as long as you're getting reversals. So for the indicators that I'm using, EZSMC, I'll post it into the chat. FVG by Nephew Sam, fair value gap indicator, right? I do use order blocks, but that's more for like confluence, not really like based on my strategy. We can actually remove those for now, right? So we only focus really on the fair value gaps when it comes to it, and we pretty much try to hone in on the fair value gaps after displacements, and we try to do it with fibs as well. Fibs, I'll show you right now my settings. Fib settings have modified a little bit. Fibs are 0, 0.62, 0.705, 0.79, negative 0.27. What do these means, right? What do these mean? 0 is where I'm drawing from, and 1, which it doesn't print, is where I stop drawing. So I'll draw from one point to the next point, and then the fibs on 0.62, 0.705, and 0.79. These are my entry fibs. These are your OTE, optimal trading. Fuck, I forgot the E. But it's pretty much your points of entry, optimal trading entries, right? So if it's at a 0.62, that's like a little bit lower, but it's a good entry. 0.705, it's a better entry, lower risk. 0.79, it's a even better entry, even less risk, but it's a little bit tight to your entry, right? So that's getting a little scary right there. Some people stick to the 80 when it comes to this. I like to stick to 0.79, and then your negative 0.27, that's going to be your exit. So if you draw the fibs correctly, which it should draw the same way every single time, you're looking at about a 2.4 risk to reward ratio, meaning that you have 2.5 times, almost 2.5 times your risk to reward. So you can mess up 2.5 times and still be profitable, right? So that's pretty good. It's always good to have, you know, a 2 to 1 or 1.5 to 1, so you have that nice little buffer in case you do mess up. It is what it is, right? You'll have that buffer. So those are the fibs right there. I'll post them a little bit later as well in the chat, so you guys can save those settings. So NQ, waiting for it to come down to this monthly fair value gap. It's been breaking through everything else, bearish candles. If you can see over here on the left hand side, if we look left, we did have a displacement over here that left a fair value gap, an imbalance. That 50% range was tapped into. That would have been sick if we caught that right on the monthly and then just rode it all the way up, because at that point all we had to do was just mark it here on the 50% range, put our stop loss at the bottom of the candle, which is a monthly candle, which shouldn't hit unless there's some really devastating macroeconomic news backing it up, such as like black swan event or whatever. So it did come and tap into this fair value gap. This was here in October 2022, and this is where we are now, October 2023, which is actually good. Year over year we're bullish, and we are heading bearish right now. Let's go down to weekly. What can we identify on the weekly? Weekly, we had a fair value gap here. It was mitigated because we tapped into it. We have a fair value gap right over here. This is a weekly fair value gap at the 14071.33 line. We tapped into this week, this previous week. Looks like we are rejecting off that. and we might just head up, or we might not actually. It's too early to tell right here, but this is a fair value gap on the weekly. We could see some movement in the daily. Let's break it down to the daily right after this. Let's identify these 2 points of interest, right? Let's mark these out. I want you guys to mark these out because we do have some news coming up soon. So here's a weekly fair value gap over here, left hand side. We're gonna mark that. Right, coordinates are on the screen: 13546.24 and 13435.43. We're gonna label this for us, and then we're also gonna set an alert. Fair value gap. I'm gonna eye it out. Setting an alert at the 50%. And then over here, we are at the 50%. We actually tapped into that. Let's find out when we tapped into this. We should have a good amount of movement over here. So this point of interest right here, this fair value gap, so you guys can see. Fair value gap is at 14222.46, 13909.54. Weekly fair value gap. That line we did identify last week as well, which is great. We identified that line last week. Now let's go into the daily, right? So we are playing inside a point of interest right now when it comes to the weekly fair value gap. That's great. Let's go down. Let's hone in on this a little further. Daily fair value gap here. So the daily and the weekly fair value gaps overlap in this area. Alright, so we should see some movement. Crazy part is we do have this huge fair value gap here on the daily that we need to fill. And we also have this fair value gap over here as well. I'm not too focused on this one. I'm more focused on this one because that's a huge movement to the downside. And it's a daily candle, so it's a lot of power behind that, right? This has already been mitigated. This has already been mitigated. So let's identify here. This is your daily point of interest. Daily point of interest right here. We're really looking at a bearish position. I'm going to change the color to red. Reason we're looking on a bearish position is because we are on a downtrend, bearish downtrend. Massive bearish engulfing candle right there, and we are making lower lows, lower highs, right? Which is part of the bearish downtrend. If we draw our fib from the top of the move to the bottom, which is the pullback, you're going to see our OTE zones, optimal trade entries. Excuse me, we're supposed to pull it from right here. Optimal trade entries, which is the previous high. This is our previous high to our retracement. Right, so we are overlapping into the fair value gap with the 0.62. 0.705 is a little bit out of the fair value gap. Let's see. And let's identify this fair value gap, right? So we're going to call it daily fair value gap. We're also going to identify the 50% line. Apologies if this gets a little messy. This fib is already done. We identified that we do have a confluence with the fib and the fair value gap, so it looks pretty good. I'll remove that for now so it's not as cluttered on the charts. Here we're also going to draw a fib. I have a fib dedicated for 50%, so that way I know exactly when to put the 50% line at. If this gets a little bit too confusing for you guys, just let me know. 0.5, it's going to be right over here. Alt H, and then we're going to color this line. We're going to color this line red because I'm looking for shorts. In a perfect world, excuse me, it's going to be a short. So we're going to identify as daily fair value gap 50%. and then we're on a lower time frame. We're going to identify that and try to play that out, you know, right? In a bearish position. Alright, that's our daily. Yes, I have this one right over here. You know what? Let's identify that because it is a daily fair value gap. So let's not ignore that completely. So we're going to identify this one too as a daily fair value gap. Coordinates are 14,339.35, 14,310.45. Let's zoom in so we can get a better view in here. Extend that a little bit. Extend that a little bit. Alright, let's identify the coordinates again. 14,340.16, 14,307.65. This is a daily fair value gap. Identify that as well. Daily fair value gap. I'm going to draw my fibs, get my 50%. So we can do the 50% of that. And then Alt H. Red line 14,323.77. Right? 14,323.77. That's going to be our 50%. Daily fair value gap 50% line. So we identified two different points of interest for our dailies. And we identified the 50% entries as well on the dailies. Right? This one has a confluence when it comes to the OTE, optimal trade entries, which is my fibs. So I'm more interested in this one, but something could actually play out over here as well. So we'll see when it happens. Let's go down to 4 hour. What can we see on the 4 hour? 4 hour, we see a 4 hour fair value gap. Oh wow, let me modify that. The 4 hour fair value gap overlaps with the daily fair value gap. It's inside it. And then we also have another fair value gap up here, 4 hour fair value gap. So we did draw out that fib from this point to this point, which is the pullback. We actually might have some confluence there. 0.705 overlaps on this fair value gap. 0.79 overlaps on this previously mitigated fair value gap, which is awesome. That's awesome confluence. I'll leave my fibs on for this one. So trade entries on 0.62 looks pretty solid, and a trade entry on 0.705 looks pretty solid as well. 0.79 looks pretty good because that's a confluence. Let's check this out. This is also an order block right here. There's a massive order block. Overlaps with this one. So we have 3 different confluences right now on the 4 hour. This overblock overlaps with our daily fair value gap and also 50% of the fair value gap, and then a 4 hour fair value gap overlapping the daily fair value gap. So you have 3 different confluences here. Order block, 4 hour fair value gap, 50% of the daily fair value gap within the daily fair value gap. And then on the 4 hour. So right over here, this little area. Between the 50% line and also the 0.62 line. I'm very confident that we will see a rejection from that. That looks like a really nice area, right? Let's go down to the 1 hour. How's the 1 hour looking? 1 hour is mitigated right over here. This one has yet to be mitigated, which is right at the daily fair value gap 50%. And then you also have 0.705 that's yet to be mitigated as well on the 1 hour. Right? So now we identified this area and this area up here are still yet to be mitigated on the 1 hour. That's looking promising. Let's go down to 15 minute. How do we look? 0.705 looks good. And then over here, we tapped into this one already. This has been mitigated. We could tap that into that. Yeah. So this area here, start looking for your entries on the 5 minute. 15 minute looks good. 5 minute. Yeah, 5 minutes choppy. Alright, so we identified the weekly, we identified the monthly. Monthly, it looks like we're about to head down into a monthly fair value gap. Where you at? We have identified that. So please, please, please mark out your zones. Make sure you're monitoring that one as well. 13767.23. We identified on the weekly. The monthly is bearish. Weekly is bearish. Daily is bearish. If you're using EZAlgo, right, EZAlgo V10, you can also enable it. Check out, and you can see that your daily and your weekly are bearish, right? We also identified we're hitting a retracement right over here on the daily, meaning we have to come right back up. In theory, tap into a fair value gap, get some fuel, get some liquidity, and continue our direction, which is why it's also making sense with the bullish bias on the 1 hour, 4 hour, 8 hour, 12 hour. It needs to come back up into these zones, get some fuel, and continue the trend line. Right? So identify 2 different daily fair value gaps, and we identified 2 different daily fair value gap 50% ranges in which we're going to be looking for a entry on the 15 minute or 5 minute. When you get into that area, if you have easy oscillator, make sure you are in a overbought territory, meaning you're over here, in order to be looking for shorts. Also, there is a reversal signal inside EZAlgo, which is going to be right over here. Reversal settings. You're going to get a red X. If you get that in that area, if you feel comfortable getting into that entry, right? But it really depends on your strategy, right? So whatever strategy you have that's working for you, stick to it. If you don't have a strategy that works for you, look into our user submitted strategies. I do recommend the BB order block strategy by Boy2K, and if not, start looking into some ICT materials, right? But we are just identifying here points of interest. These are the 2 points of interest we identified that are going to be good moves for us in regards to NQ, NASDAQ. So this could happen throughout this week. It's not going to happen fast because these are on the daily time frame, but who knows? This one's really tight and really close to our point of entry, or excuse me, the market open right over here. So we could probably see that happen tomorrow, Tuesday, Wednesday, who knows? But these 2, very likely that we'll see some kind of reaction happening throughout this week. Depending with news and macroeconomics, we'll see some kind of reaction to it. But either way, it's a fair value gap on a daily, so you should see some reaction period when it comes to lower time frames. So if your entry's on the 5-15 minute, then you should be good to go. We're looking for low time frame. It's bullish because it has to reach these fair value gaps. And then the higher time frame play, we're going to continue our trend downward. Does anybody have any questions for NQ at the moment? And sorry if I feel like I feel like I'm talking a little bit too fast. Let me know if I need to slow down. Shveti, I see your light turn green, but I do not hear any audio.
I can hear you.
You look? All right, cool. Hey, real quick. So I know.
Yeah, I hear you.
You're just identifying points of interest and not giving signals here. But you yourself, do you expect you to kind of wait for it to reject off of that fair value gap there on the daily, or would you be looking to play that out in that potential move up?
So what I'm looking for right now, because we have to go with the saying, right? Trend is your friend, right? Higher time frame trend, monthly, weekly, daily, bearish. Lower time frame, it's going to be bullish. So it falls in line with it forming a retracement to get more liquidity and continue with the trend. So I personally am looking for an entry into the bearish movement when it comes to that retracement. So that's what I'm looking for. But in order for it to get there, it's on the lower time frame. It's going to be bullish. So you could probably scalp some bullish entries while it's on the way to get to those daily fair value gaps, if that makes any sense.
Yeah, no, that does. And I think this would kind of fall under the not trading against the trend in this, especially because it's at a higher time frame, right? There's except a scalp, there's no real point, right? So
Yeah, man. So this one, I'm not gonna say it's tricky because it's really not. Uh, just remember that our high time frame bias right now, it's bearish, but your low time frame bias is bullish. But if you're trading with the trend, you'll have more probable wins if you're doing shorts versus longs until you get to those fair value gaps, right? Excuse me. If you have some longs, you could probably do them all the way up until those fair value gaps, but try to look for good entries into bearish entries. But you're just playing two different games at the moment: higher time frame and lower time frame. If you're scalping on 1 minute, 5 minute, 15 minute, 1 hour, then you can do your intraday and then long it. But like I said, it's your strategy, whatever strategy you want to use. But just know that right now, it's two different time frames that you're looking at, low and high, and both of them are different.
okay, cool, thank you.
You're welcome. I mean, sometimes the stars align, and then you have everything going in one direction, so that way you only have to focus on one thing. Like, let's say if everything was going bearish, even the lower time frame was bearish, then all you would have to do is just literally just open up a bearish position at any point of interest, and you're bound to make money. But unfortunately, that's not what's happening right now. But it's actually also good too, because that way you can scalp it on the way down. You can get some money with the retracement, and then you'll get some money with the continuation of the pattern of the trend. Let's move on into some metals. Does anybody have anything else for NQ? If not, thumbs up. We'll move on to metals. We'll be going into gold. Speak now, forever hold your peace. We are going into gold. Give me 1 second. Let me clean up these charts. What are we looking over here? Daily. Yeah, gold has some nice movement this week. Let me modify a couple of things. This has already been mitigated. Alright, let's remove all this stuff. What a crazy week. What are we looking at over here? Friday the 6th. Looking at Friday the 6th. Well, 4 weeks ago. Alright, we are looking on the daily. Daily is bullish as hell. Weekly, how are we looking on the weekly? Weekly is bullish as hell. Let's start marking out the weekly, right? So we're kind of ranging on the weekly, but more on the bullish side, which is good. So we do have some strong momentum into the upside. That's great. Right, so we are kind of ranging. That's kind of good. That's kind of really good. So let's identify this point of interest right over here. This is a fair value gap on the weekly. And the way things are going right now with gold, it's so volatile. We might as well identify all these zones, right? And then we'll probably hit those sometime until the end of the year. This area right here, we are identifying a weekly fair value gap in continuation with the trend, so we are looking for bullish momentum here. 3 equal lows. That's actually really nice there too. Let's identify that area too. I'm gonna identify that as support level. Weekly equal lows. Support level. At that level, you can probably look into some scalps. Alright, this fair value gap over here, let's identify that. Weekly fair value gap. Then we're going to also do the 50%. I'm going to eye it out. Let's identify that. Weekly fair value gap 50%. Right, so that level is 1705.29. We have another weekly fair value gap right over here that was done the 9th of October. Let's zoom in real tight on this one. And then I'll go over the coordinates with you guys right now. So for the bottom fair value gap, we are looking at coordinates 1729.50. Bottom of it is 1682.72. 50% range, it's 1705.29. Alright, you can see them right over here on the right side when I click it. Let's go over here to this one. 1908.52, 1850.15. Let's label that. I'm gonna eye out the 50%. And remove this alert. Weekly fair value gap 50%. And then we're looking at that one at 1879.49. It's pretty low from where it's at right now at 2002. But at 2002, at 2000, we should see some kind of movement. So over here had some rejection. So we're going to identify this level as well. Just to look at it. At this level, right, it was rejected, and then previously as well, near the same amount of level. Been touched three times, excuse me. So we're looking at 2073, 2070, all the way to 2080. So 2070, 2080. You're looking at a rejection. It's a triple top. Each time it hits, massive displacements. We might be setting up for that. That looks really good. Let's keep that identified. Let's be a little bit aggressive with it as well. Let's bring it down to this one right here, the lowest point out of the three, which is 2070.48. We're going to identify that. I'm going to mark it as well. I'll probably take some time to get up there, but I'll probably forget like why I set the alert. So I'm marking it up right here because I always have a bad habit of not marking that. Coordinates. Okay, set an alert. Alright, cool. So I identified on that a weekly. Pretty good to keep an eye on that on the weekly. Alright, so fair value gap over here, 50% range is identified. And then we also have another fair value gap right over here. Bullish, we're looking for bullish momentum. We are on a bullish trend. Move this forward a little bit. Weekly fair value gap. Identify our halfway point. Let's change our colors to match. Halfway point is 1942.87. It's going to be our weekly. Let's identify that as well. Weekly fair value gap 50%. Awesome. We identified two different fair value gaps nearby on the weekly fair value gap in the 50% range. We've also identified another fair value gap previously on a lower range So if some crazy black swan event happens that forces us to go down here, then we're already prepared and we know what to be expecting. We have this little micro one over here as well. Let's identify that. The 50% range on that is 1763.33. Make sure you have an alert on that one, because something should happen. It's either going to bounce off that or go straight into this weekly fair value gap on the bottom. So have that one identified and marked. Set your alerts. 1763.33. And now we're going into the daily. Daily time frame, right? We have 1, 2, 3. We have 3 fair value gaps over here overlapping inside this weekly fair value gap, and then we have 1 fair value gap over here overlapping this weekly fair value gap. This fair value gap has been mitigated on the daily. This might actually form, that's actually a fair value gap right there. I don't think the indicator shows it, but it has to close the candle first. But this is a fair value gap that has yet not to be identified. That could be a really nice point of entry for us. Let's keep an eye on this over the next day. But this is a potential fair value gap that could play out very well for us. So this fair value gap hasn't been identified yet because the candle's not closed. Coordinates we're looking at is 1996.99, bottom 1993.48. Let's label that. It's actually good. This is really, really good. So I'm gonna draw the fib on this one. I'm happy we actually caught this one, because this one actually might be a really good entry for us. Top of fib to bottom. Then we're looking at your 50%. 50% is going to be 1995.23. That's our daily fair value gap, 50%. Set an alert on that one too. That one looks really good. Let's see what the ROI looks on that. The RR. Alright. I'm going to draw it out to here. Pretty big stop loss on that. Alright, cool. So I identified that one right there. That's our daily fair value gap, 50% range. We're still waiting for this candle to close. It's playing in this zone over here, this area. Let's go down into a lower time frame. We can probably find a nice tight entry for that. What's cool is that this area has been an area of resistance before. Now it's converted into an area of support, as you can tell by this wick over here, which is great. Gives me confidence that we're going to continue the momentum to the upside. Right now we are in the bullish momentum, as you can see here. Higher high, higher lows, and it's pretty damn clean for being on a daily chart. The candlestick movement. Let's go down to 4 hours, see what we can see on a 4 hour. What confluence do we see? Alright. So a daily fair value gap overlapping with the 4 hour fair value gap in this little area right over here. Gives us a nice little confluence within the 1995.23. If we draw out the fibs from this bottom to this top, we should see the retracement in our optimal trade entry. But we need to wait for this candle to close on the daily. On the 4 hour, it should give us a lower time frame. Four-hour, you can see right here, as soon as that closes and it's a confirmed retracement. Our 4 hour OTE entries on the fibs, 0.62 and the 0.70 overlap with the fair value gap on the 4 hour. So we could be looking right over here. This could be a higher trade entry right here for us. So let's identify that. It does get a little bit messy sometimes. You do have a lot of things overlapping, a lot of fair value gaps overlapping. So I try to keep this as clean as possible. Over here is also an order block, right? So you have this order block. You have this fair value gap here inside a daily fair value gap, and then you also have the optimal trade entries telling you that 0.705 looks great and the 0.62 looks just as good. Good thing about the 0.705 is that it's at the order block, and then this one in the 0.79 is at the halfway point of the order block, a little bit above the halfway point. So all three of these are pretty good entries, right? Depending on how your strategy is, you might do DCA and go into all three, or you might just do the first one, 0.62, to be safe, or you might just do 0.705, right? Or maybe 2 out of the 3, 1 out of the 3, all 3, whatever. It really falls on how you want to run your strategy. If it's working, stick to it, but we're just identifying the points of interest. So drawing out the fib to this little area here, and then once the 2-hour confirmation is closed, the candle's closed as a bearish candle, then we're looking at this to become our retracement. So this area right over here looks pretty solid in order for us to look for entries. So identify the fibs, right? Our points are 989.27, 1986.49, 1983.72. Honestly, there's a lot going on in this area, so I really do like it. I'm going to set an alert at 1989, and I'm going to set an alert at this one right over here at 1986.56. Let's set an alert at all three, and then we'll watch it on a lower time frame, like 15 minutes, to see how it reacts from there. If you feel like this is a very strong possibility to in a continuation to the uptrend, look at this beautiful fair value gap being mitigated and running. This one as well, 50% mitigated and running. If you feel like this is strong enough, I would definitely set a limit order, but don't over leverage, don't over risk. If that's not something you're comfortable with, and that's not part of your strategy. Who said yo? Oh, Jay, what's good, Jay?
What's good?
What's up, brother? Welcome in. Good evening.
How are you? How was your week?
Good, bro. Well, trading week, I got a little smacked around a little bit. I had an amazing trade that I got into, but I went a little bit too heavy when it came to my position size, and yeah,
you
man.
over-risked?
Yeah, a little bit, man, but everything went in my direction, and then yeah, man, I got knocked out of the position, and then it went fucking right exactly how I wanted it to. I would have made like 20x on that move.
Oh,
but
you got one of those stop runs.
Yep, that's exactly it. They fucking hunted me down. Hilarious.
Yeah, take, bro.
So we're looking right over.
Can you check US 30?
Yeah. I'll check it right now. So we identified these right here, these fair value gaps and these points of entry on the 4-hour. These look pretty sweet. 2 hours left for this candle to close. Let's go down to 1 hour. Let's see what's going on here. Huge fair value gap over here. The 50% of the fair value gap, the 50% overlaps with the 0.62, so that looks like a pretty nice entry as well for the lower time frame. That looks pretty fucking sweet. I think we identified a really nice point of interest, guys. Let's look at the 15-minute. 15-minute within the daily fair value gap. You got one right outside here. That's been mitigated already. 1, 2, 3. And you can see, guys, like when it comes to like these fibs, like the optimal trade entries, it's pretty decent. Like the confluences are there. So we saw there's a confluence right over here on the 1 hour. So the 0.5 of this fair value gap is pretty much in similar area as the 0.62. And then at the end is going to be the 0.705. Right? So that looks pretty damn good. Then when you go down to like 15 minutes, you see there's also another fair value gap inside here. And you also see that the 0.705 is at the start right over here. which is the halfway point of this fair value gap on the 15-minute. That looks like a sweet entry there too. And then you have a 0.79 at the 15-minute level is a fair value gap. So that's a pretty dope entry there too in the lower time frames. So keep an eye out for those areas. I'm glad we were able to catch this as it's developing. Set your alerts and try to play those areas as best as possible. And yeah, just follow your strategy when it comes to this. If anybody has any questions for me, please let me know right now in the chat. Otherwise, give me a thumbs up in the chat so we can move on from here. We're going to check out US 30 right after. And then after US 30, we're going to do 2 Forex pairs of your choosing. Let me know which ones you guys want to go over. Got a thumbs up right there. We are moving on to US 30. Let's go. Let me mark that actually because that looks really good. Alright, US 30. What's good, Jay?
US 30 looks juicy.
Bro, US 30 and NAS. US 30 scares me sometimes though. There's a lot of fucking money for a position.
Yo, I've been only trading US 30.
You're having a good time with that?
Yeah, it was good. I traded the whole thing.
Damn, okay.
I've been trading it since the top of it.
Yeah, US 30 scares me a little bit. Let me. Oh well. There we go. Let me look at NQ. So let me look at NQ looks cleaner on the weekly. US 30 looks rough, man. That's fucking Chop
Yeah.
City in there. That's scary.
Thing manipulation.
Fucking Chop City on the weekly. So this fair value gap here has been mitigated. We still have this one over here. So let's identify some fair value gaps, guys.
It's
I have
reaching
not
for that one right now. It's reaching for that one.
for the bottom one or for the one that's been mitigated.
The one right there is reaching for that one, and then if you pull your fib, it'll be right there too. See?
Holy shit.
I got the X-ray vision, bro. I don't even have to look at it.
Bro, that's insane. That's insane. That is scary.
I got X-ray. I got X-ray vision, bro. My eyes they have auto fibs.
Auto fibs. Yeah, dude, like some people do develop that after a while. I've heard some traders like they can look at a naked chart and be like, "Oh, this is the entry right here because that's a 0 point something fib." I'm like, "What the fuck?"
Yes.
Like
I
literally you
mean, the
could
easiest way to just understand even without pulling the fib is just understand your whole low to high, and then just identify. You should be just genuinely able to cut it in half with your eyes, right? And you
yeah.
have your 50% mark, then 75% mark, just quarter below. So you can see it instantly if you think in that sense. So that's how I know that fair value gap was lining up right away, instantly. Because I just see the low, I just see the high, cut the middle in half, and then just right there, so you can kind of tell. You see what I'm saying? If you think about it in that sense.
Yeah, yeah, so I just modified it a little bit to like the most recent one. That looks really fucking good, dude. Holy shit. But I mean, your reversal, which should actually be right over here. That should be the reversal. So that one looks about
Yeah, so
right.
when it taps in there, I want to see a nice clean 5-minute accumulation manipulation into that fair value gap. And then I want to see a clean displacement out of it. And then we can trade the new bullish fair value gaps to the upside again.
Yeah, that's what I'll be looking to. I'll be looking for a nice displacement with an imbalance. Probably like on the 15-minute though, because 5 minutes too choppy. US 30 scares me, man. It's such a
I
massive
love
move.
US 30. I love US 30, bro. That shit was juicy the whole week, man. I traded the whole move up and down, bro. The whole week, bro. Shit is
Holy
wild,
shit.
bro.
Right, so let's
Just up and
identify
down and up
these.
and down.
So we have
And
these
then the
right
thing
here.
about US 30, bro, thing about US 30 is it always comes back. It does forward retracements. That's why I like, because it will go up, right? It will do X amount, and it will do X amount same way back down, bro. That's why I fuck with US 30.
Dude, Nas got me like
You
that
can
the other day.
you can long and short in one day, just both moves. You can catch the manipulation and the distribution. So depending on the day, if the manipulation to the downside, you get a massive short, and then you can take a massive long instantly after that, and then that's your move for the day.
Dude, I tried doing that the other day with Nas because it usually does that. Oh man, it got me good. It did not retrace. It did not retrace at all.
That's why I've been trading fucking US 30. It gives good retracements all the time. It
Uh,
always comes back.
I'm gonna start looking into that because I know the position size are pretty big, so I use my magic keys to
Yeah,
calculate it.
it's little thicker. You feel me? It's a little thicker on the US 30, so you gotta be careful. But you know, I think the minimum is like, I think for 0.01 it's like 170 something
Oh
per
yeah, and
pop.
on what broker on Hugo's, right?
Yeah, on Hugo's, yeah.
Yeah, it's like
So
1.70 something, 170 something for
yeah,
0.01.
it was like $176 per 0.01 lot if you have a personal account on Hugo's. So I mean, it's kind of scary, yeah,
Hell yeah.
but it's literally you understand which way it's going. It's easy money. If you don't know which way this is moving, you're losing everything. Type shit.
Pretty much, yeah. This is for the skill
You
traders.
just really have to know the daily directional bias. That's all you have to catch. You're just catching the meats out of the daily moves, especially trading indices. Unless you're swing trading, then it's different. But
Yeah, I identified these two fair value gaps for you guys, daily fair value gaps. And we're identifying the zero point 0.5 range as well. Daily fair value gaps, if you can see right over here, you're going to have 33593.47 is the entry, and then 33401.86 is the bottom. Halfway point is 33487.40. And then this fair value gap over here, you're looking at 32966.08, 32925.30, and then the bottom of it is 32884.53. Let's go down into a lower range. This right here is forming as well. It might actually retrace, but if we look into the OTE, if this actually becomes a retracement, let's draw our fibs. Let's see what's up. If you're looking at the fibs,
that's
if
a
the
fresh displacement downside. It'll come
yeah,
to the first fair value gap. It's not coming for the second.
not for the second.
Yeah, not for the second one. Because we have a new displacement, right? From
Wait,
from you see the low? Exactly. That's where you want to be looking for now, right? And then if we have a displacement above that, then you should get an entry up there for sure. Because then if you don't do it like that, right, then you could just miss the whole move because you're waiting for the
exactly.
top. Yeah, so you have to do it like that always. Try on the first level of the displacement, which is right there, right? It just had a new market structure shift with a new displacement, creating new fair value gap, right? And that's why you sometimes don't see moves fully retrace up. That's the reason why. Those are the things that you guys need to look for.
So we have here the 0.62 and the 0.705. Those are inside this fair value gap pretty much. So
Yeah,
yeah,
exactly. Again, lining up. Those are the golden ones. You see what I'm saying? Every
yeah.
time overlapping with the fair value gap, and especially if you have another time frame fair value gap right there. Boom! Now you have overlapping PDRA plus a fair value gap lining up with your Fibonacci retracement level. Right? That's all the confluence you need for execution. Right? And
So
then you can use like divergence, and then you can use momentum, whatever you guys want to add on as a confluence as your own liking.
let me add this one over here as well. This is your 4 hour.
See, look. Go to the setting of your box. You can actually put a middle line on it, so you don't have to mark a fib every time.
Are you serious? I could never figure that out. How?
Style. You see the half mark?
Wow.
Yes, bro. So you don't have to do that every single time,
No
bro.
fucking way.
Yes, bro.
I've been doing this shit like that has to be an
See,
update.
yeah. That's how you mark the halfway, so you don't have to mark two times every time. It would just be one time.
Wow, I learn something new every day, man. I did not know that.
Just just mark the middle line, brother. You don't have to do it every time. See? Then you already have 50% every time.
Mark my alert. Alright, so this one right over here, 4 hour fair value gap. And the 50% line right here. 50% is going to be at 32760.68. That's going to be, and then we can probably draw a fib on this one. This one's already retracing. Lower time frame where we're looking at 4 hour. Holy shit.
Yeah, everything's saying right there.
Yeah. 0.79 is aligning perfectly on that. That looks fucking beautiful, dude. Massive fair value gap right over here, but that looks beautiful.
And it looks like it will wick into there.
And then since this is on 4 hour, we actually could see this on New York Open tomorrow. It looks pretty good. Worst case scenario, like Monday night. But definitely, yeah, guys, 32758.50. Have that identified. Look into it. That's a point of interest right there. Overlapping with the OTE. Looking pretty damn good. I might actually set a limit order on this. Be very careful when it comes to positions with US 30. They are huge positions.
Yeah, US 30 will fuck you guys. You guys gotta be careful. And especially if you're on a personal account on Hugo's Way, all the indices is fixed 500x leverage. Don't forget that, guys.
Oh, it's all
It's
fixed?
fixed. Yes, on your personal account, yeah, it's fixed. Not on the funded account. It's different. Funded account depends on the firm, but on Hugo's, anything indice on a personal account, it doesn't matter what leverage you set to. Any indice
What?
is set to 500x.
I did not
Yeah,
know
that's why
that.
it's crazy. Yes, that's why I trade on my personal account. That's why I don't need to trade funded account, bro. I'm trading 500x. Why do I need a fucking funded account?
Exactly. No, yeah, because I always thought Hugo's Way would
See what
you
I
could set
mean?
down like the leverage, like 50, 100, 20, but indices 100%, it's gonna be 500 no matter what. That's crazy.
Exactly. You guys need to be careful. You guys need to really be careful with it when you're playing indice on your personal account. Okay, if you guys have a prop firm, it's fine. They already regulate rate, so you don't go fucking berserk on it, and it will be the max like 100, I think, right? Or some firms I see max 200, but that will be it. But
Yeah. Yeah, I have seen some firms
yeah,
beat max 200. That's the one I'm using right now. So I'm using Royal Account, which is 200 leverage, which is great. Weekend holding EAs and 200x. That's perfect for me.
yeah, me too. I have my personal account set on 200x, so 200x is perfect for me.
Yeah, that's a good one.
200x, in my opinion, for forex compared to crypto, it feels like 20x. You see what I'm saying? That's
Yeah.
the best description I can give. Like
Yeah.
that's like me using 20x on crypto leverage. That's how it literally feels like, right? When it's trading, when it's actually like in the move, it feels like I'm just using 20x in crypto. But forex moves are a lot larger. I mean, market caps, a lot.
Yeah, you're looking
$7
at
trillion
fucking
dollars in forex market
yeah, $6 trillion being traded every single day,
every day,
bro. Hella
every day.
liquidity.
Crypto is like is nowhere close to that. It's in the billions, not in the trillions.
Yeah, it's like a couple
So
100 billion, and
yeah, so
and then
it's
you
a
have one
complete different
shark.
game. So exactly. So you guys need to really be careful, especially if you guys are trading US 30. And I don't recommend if you're new to trade US 30 because you
Yeah,
guys will
if
wreck
you're
your money.
new, don't do the indices at all. Try to
Yeah,
get
it's not just to start with Euro USD and things like that. Those are simple. Like Euro USD has a clean ass chart. You can trade it every day.
yeah, and then if you want to get your ass kicked,
Like
do GJ, GBP, JPY. If you
yep,
really want to get your ass
GJ.
kicked.
Yeah, those you see what I'm saying. So there's things but find the characteristic of the chart that you guys can actually trade. But you have to try it first, or you won't know. Right? So try with proper risk management and find the pairs that works for your time zone, because all pairs have different volatility at different times. And all you guys should know that, right? So make sure the pairs that you guys are trading, you guys are all from everywhere, right? Not everybody's from one place. So you guys need to make sure, according to your time, understand when those assets that you're gonna trade or the pairs, the times that they're volatile, right? So, and then
Exactly.
avoid trading Asian sessions. Like just simple things like that will save you. Just understand it though. Don't trade Asian session. Don't trade range. Don't trade consolidations. Simple. Those things, you come today and you look at the chart and it's a clear chop consolidation. Do not just trade. Just don't trade it. It's not worth it. Those are the places where it's meant to get your liquidity into the market, so you place a stop loss above those levels, and those are meant to get taken out. So if you understand that, you would just simply avoid it. It's like understanding there's a shit on the floor and just stepping right over it. You walk around it. It's the same thing. Understand, if you get into a consolidation range, you're gonna become the literally you're gonna become the liquidity.
Yeah, consolidation
That's what
really
is
messes you
generating
up.
liquidity. Yeah, exactly. And where it consolidates is where there's liquidity being generated, meaning your stop loss goes above those highs, below those lows, right? So now what's happening? Everybody that's trading there, it's accumulating stop losses, which now equals to generating liquidity. Understand that.
Jay, how do you feel about Euro USD right here? I feel like it grabbed the sell side liquidity right here, getting ready to just pump back right up into this fair value gap.
Yeah, it's doing the ABC, so it's pushing down right now, and then it's gonna retrace back up to rebalance, and then it's gonna go back for the lower one down there.
Yeah. Yeah, it's gonna push up pretty violently. I'm gonna identify this area.
It's gonna trap people in again.
Let's
see how the market. Oh, it's pumping. Let's go. Bitcoin is moving. Bro.
identifying this
Easier,
weekly.
bro. Got fucked the other time, bro. I got fucked on Bitcoin short the other day, bro.
Because the wick kept going
the
up.
day that it went to 35K, bro, I don't know how I knew something was gonna happen that day, so I just risked on the short side because there was like a liquidity that's been resting there for over a year. It's just been above 32K, right? So I've been just fucking trying to short that 32K liquidity for the longest time, and it finally happened. So I fucking, I risked my, proper risk, and then fucking just slammed it, and boom, stop loss, boom, 8K instantly, bro.
Damn.
I lost 8 hands in like 10 minutes, dog. That shit was crazy, bro. The moment I got into short, bro, it filled my shorts, and then boom, that shit just went to 35K in one candle. I was just like, damn, cuz. And that's why I was like, after that, I was just trading US 30 all week.
Yo, you wanna hear something crazy? I've had these areas, these zones mapped out since
Look
February.
how close it's about to hit that one of the. Look, I'm telling you, bro, this shit went nuts. Look at that shit, bro. That's a displacement, bro.
That's a displacement.
Yeah, that's a displacement, bro. I'm telling you, this not. I don't think this time it's not like a scam fake pump. It's finishing. It's doing its thing right now, bro.
Kind of scary, right?
Bro. Yeah, exactly. It's scary, and
bitch
bro,
left me behind.
Hella retails are waking up again. That's what scares me, right? Because we longed everything at 15.6. So me, in this stage of my spot bags, I'm kind of TPing. I'm taking money out of the market. I'm not fucking sitting here holding it forever. I know it's gonna wash after this pump again before we truly move up. So I'm gonna be able to get in again. It's just about taking profits, bro. At the end of the day, people don't take profits.
That's me, bro. Like, that's my biggest thing. Like, I get greedy and I don't take profit, and then it's like a winning position goes into a losing.
Money, bro.
Let's
Just
see this
take the money,
daily.
bro.
Market structure shift down. This is consolidation right here. Yo, I might actually just long EU. Look at all that liquidity on the upside. Took out the sell side liquidity right over here. Collected some fucking fuel. Getting ready. Pumping. Consolidation.
We need a clean displacement though. We need a nice fair value gap. There's no fair value gap, no displacement. Just simple as that, bro. To have displacement, you need a first energetic move. Second, you need a market structure shift. Third, you need a fair value gap. That's what makes displacement. If it doesn't have those three, that's not a real pump. That's not a real move that you can pull a fib swing low to swing high to retrace that move. You get what I'm trying to say? This is where people will get trapped and go long, and it will go short. Accumulation, manipulation to the upside, displacement to the downside.
There you go. That looks much
So
better.
I would wait for a real fair value gap to pop up.
Yeah, that's
and
true.
Then you know that we got bullish order flow. Because right now, overall higher time frame, it's downtrend still.
Yeah,
Shows
downtrend,
no
higher
sign
time
of-
frame.
Yeah, exactly. That's how you would get eat up in this lower time frame.
Yeah, right now it's choppy. Choppy seas. Look at that. Chop, chop, chop
Yeah,
city.
exactly. So you would just avoid here anyways. Because this is the Asian accumulation. This is what I just literally said. Do not trade Asian sessions, and this is exactly why. You'll become the liquidity here. I'm telling you, this is how. Now think about it. Every one of those highs and lows, there's stop loss above it, still accumulated. It's gonna make a big push up or down to clear one of those sides or both sides, and then the real move would happen every single time. Right? It's gonna either take the Asian low or Asian high out. If it takes the Asian high out, then it's gonna hit a order block or fair value gap up there. It's gonna go straight back down, right? And that will be the Judah swing.
Yeah, this shit is choppy as fuck right now. Like even going from daily to the lower time frames, it's just pure choppiness. There's a
It
fair
looks
value
scary,
gap right
dog.
here. Yeah, there's a fair value gap on 15-minute, but like there's no clear direction. Right here, in theory, yeah.
I mean, look, on 15-minute though, Caesar,
Uh-huh.
it doesn't look. I mean, go back to 15.
Yeah, in 15-minute, you can probably get a move
down.
in scalp. Right here.
Yeah, exactly. So you would need it to come hit there, and then you need a displacement up, and then a fair value gap, and you can take the fair value gap entry.
Honestly, because the way it's looking right here on the lower time frame, like I mean, it's so choppy, man. It's gonna chop you up. So I mean, I would long here 50% underneath here. But either way, then you have the sell side liquidity right behind that. So then you have to go over here, and then it's just a massive fucking stop loss. And then you're looking for 2 to 1.
I'm telling you, bro. Things are wild right now.
Yeah, if you do the 2 to 1 right here, it's gonna chop you up and chew your ass out. Even if you do the OTE on here, let's see what the OTE looks like. OTE overlaps with the fair value gap, which is great, but I don't know. You could probably scalp it, but there's also another sell side liquidity right underneath it. It did take that on the higher time frame.
That's what I'm saying. There's a higher time frame POI below it, then you need to use the higher time frame POI below it, not the lower time frame POI.
Yeah, I mean on the daily it did take out that POI though. It took out all that liquidity on the sell side, created a new sell side liquidity right here because it went right underneath this one. This wick.
Oh hell no, that looks terrible, dog.
Yeah, it's so fucking choppy.
This looks bad. This looks terrible.
And this is a daily. Look at that.
Yeah, that looks very, 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 very scammy.
Yeah, it's super choppy.
It looks like it wants to wick down. It looks like it wants to wick down there.
Honestly, how I see it like it wants to move up, but it's gonna fucking just gonna grab everything down here. Because right here is when people get comfortable. Like here is probably like my instincts telling me like, oh wow, higher high, higher high.
That's where most retail is comfortable right here. It's because it's holding structure, and like for me, there's no displacement. So if you're only understanding structure, this could look bullish, but it's not bullish. I mean,
yeah, especially when you have this bearish engulfing. You have a bearish engulfing there.
Exactly.
Bearish engulfing. Bearish
right
engulfing.
after we just filled the CB2. We just filled the sell side imbalance. Then we rejected heavy.
Yep.
So
like it's matching.
We're respecting the bearish order flow.
It's extremely indecisive, Shrifty. Yeah. So right now it's chop city. So you can try. I wouldn't try, but lower time frames like 5 minutes, 15 minutes.
I wouldn't do it. Look. You need to wait for the low to get taken out. You need something to get taken out for you to get an entry. Always, at any given time. If nothing's taken out and you enter, you're gonna get taken. It's as simple as that. No. It's just simple as that, bro. Just wait till somebody gets taken out. Up or down doesn't matter. If it takes out the down, then you're taking it wrong. If it takes the upside, then you're taking the short. Simple as that. That's why I don't have a bias. I'm never bullish or bearish. I just go with whoever,
Liquidity gets
whichever
taken.
side getting fucked. Exactly. Whichever side, it's patience game. Literally, have the levels watching. This is the previous. And you want those levels to be time-based. You don't want just random lows and highs to be your level. You want them to have higher time frame point of interest. You want them to have, a significant London high, Asian low, New York high, New York low, something like that. You need a time-based liquidity above it as well. That will give you the
Exactly.
best chance of the entry any single given time, any single given day. That will be the highest probability trades that you can take when the time and price are equal. Okay, when the time and price are equal.
So whatever you do, try to stay out of the Asian session. Do not trade it because it's
And then it wants
consolidation.
that 50% of the wick first. So right now, if you're looking for a long on this, look for that previous daily wick.
Exactly.
I don't know if there's a wick. I
No.
think we just ate that wick.
So let me go on the daily.
Oh
Daily's a decision
So
candle.
you look exactly but you look at 50% of that wick, and then if we disrespect that, then we're going all the way down. If we respect it, then we can bounce. Because now the algorithm treats those type of wicks, 50% of it, right? CE of it, the middle point of it, right? It treats it as a fair value gap. That's why it always likes to retrace back into 50% of the wicks, because the algorithm treats it as a fair value gap.
Yeah, the wick
It's
and
not
the
a
fair
fair
value
value
gap
gap. The
overlap at
algorithm
50%.
50% of the wick. Exactly, 50% of any large wicks, right? The algorithm treats it as a fair value gap. It sees it as a fair value gap. That's why it always rebalances into 50%, 70%, or near that area, right? And then if it's gonna hold that idea, that's just the wick. That's just doing the damage. You see what I'm saying? So the real idea is to go high. It's just sweeping the low.
Yeah.
Right.
Yeah, I never knew that about the wicks.
Yeah, so everybody should have took a note on that. Okay, understand it, and you'll see it. Just watch the chart, and then you just listen to what I said, and then you'll see it happen, and you'll be like, "Damn, okay, this is what he means." Right? You'll see it for yourself. Okay, understand it. Right? You'll see it. You just have a previous daily wicks, and it's a large wick. Right? Put 50%, mark 50% of it, and then if it disrespects that level, then you know it's gonna go below. You know it's gonna disrespect it. Because now, like I said, it treats it as a fair value gap. So that means if it went below, that it will treat the same as that it disrespected a fair value gap. Right? So meaning it's disrespecting the order flow overall.
Yeah, but this shit is Chop City. And like I said, like I want to get in a position just because you're seeing like the movement, like
Nah, wait
the
for tomorrow,
structure.
dog.
No, exactly. I am. Trust me. I don't
All
trade Asian session.
you don't want to get chopped up. You don't want to entry when, like I said, if nothing's happening right now, right?
Yeah,
Wait
exactly.
till something to happen. When that something happens, it will take people out and have a displacement. Then it will show you which way to trade.
Exactly.
It's really that simple. Wait, if there's nothing, you don't see anything. It's simple. You just sit back, take a relax, and you just look at the things. Nothing's happening. Clearly, nothing is happening. Wait till one side or the other gets taken out. Then, displacement to the upside. Okay, we can start to look for longs from this new fair value gap. Oh, displacement to the downside. Okay, we can start look for new shorts when it rebalances to this fair value gap. Then you start to initiate your plans and you print or you get stopped out, one or the other. That's it every single day. If there's nothing happening, then you just don't do anything. It's chopping, consolidating. Good, let it do that. It's generating liquidity for me to take later. If you join them now, then you'll become, one of those people that gets taken out, and then the move will happen later. You see what I'm saying? So it's really comes down to patience and know what you're looking at.
Yeah. So yeah, don't force your
Yeah,
trades.
exactly. Don't force the trade. Exactly. Don't force the trade.
You don't have to.
It
I
doesn't
mean,
need to be forced.
the best thing you can do is just wait for it. Honestly, people are trying to get into trades every single day. You don't have to. You just get one good trade a week, and then that one good trade, monster trade. Just wait for it.
Yep.
That was my thing too in the beginning. In the beginning, I was like, "Oh, I'm a day trader. I gotta trade every fucking day." No, day trading means like you leave a position before the day's over. Not that you have to be in positions every fucking day.
Bro, and then simplest thing, guys. Okay, if you can at least pull off 3RR every single trade, which if you trade OTA entries, if you trade the way that we trade, then you should always be able to at least get 3RR. And if you can do that, the next thing that you guys just need to really work on. Hold on, give me 1 second. I'm getting a call. I'll be right back, boys.
All right. Yeah, I mean, if you're getting the 3RR, you have two chances to mess up, and then on the third try, if you mess up again, you're still break even. So that, I mean, that's always a goal. With the OTE, with the fibs like we had before, let me show you guys again. With OTE, what that does is it's math. So whenever you're entering, it's gonna give you like a 2.42 RR if I remember correctly. So that way you have a nice little buffer to mess up, like if you do mess up, because I mean that's what happens, right? So let's say, for example, I do get into the 0.705, right? My stop loss would be right underneath this candle, just for example. And then I'm aiming for the 0.27, negative 0.27. And then you're looking at a 3.27 RR, depending on how tight the stop loss is. Like I could get more RR, I could get less, but it's usually about 2.42%, right? So you're looking between 2 to 3 RR when it comes to the OTE entries, especially in the lower time frames. But definitely look into that. It's called OTE, and it's a ICT slash smart money concept strategy. It's pretty cool for confluences. Don't just run off it by itself, but definitely use it as a confluence when it comes to getting into entries. Yeah, this shit's fucking chop city. Break a structure, market structure shift.
Do
Yeah,
you
I mean,
know how to
there's.
pull the standard deviation fib?
What is that?
So standard deviation is, you know, another way of calculating average price, right? So it's for forecasting the price, right? It's price projection, right? So it's also math, like Fibonacci sequence, right? So you'll use the fib tool, right? For standard deviation. So let me show you right now. I'll show you the setting on the standard deviation. So how you use the standard deviation fib, after, I'll show you after the setting, but I'll send you the setting first. That's how I project my prices. Okay, I'll show you.
Show me, yeah, please.
Okay, so these will be my standard deviation level. You can go to the chat. Hold on, I'm about to
Yeah,
send
I'm
it
looking
into
at the
the
chat
chat
right
right now.
now. Standard deviation is gonna be an indicator. You said
No. It's a setting on your fibs. You set it certain
settings
way.
of fibs. Let me create that right now.
Yes. So if you go to your chat, or you see the chat,
Yep.
I just sent it. So you need 1, -1, 0, -2, -2.5, -4, -1.5.
You see all of them red.
I mean, you can do whatever color you want. I just want different colors. It's just simple. You just need to see the numbers. So
Gotcha. Negative
you
one.
don't want to draw it like a regular fib. I'll show you how to draw it. It's quite opposite of drawing a fib.
I'm fucking lost. Oops.
Okay.
2.5. -4. And then we're gonna do -1.5.
Yep.
How do you? Okay, show me.
So now, to how to use this, right? First, you need to be able to identify manipulation. Okay, what took out the previous high? What candle took out the previous lows? Okay, that's what you're looking for. Okay, so go to like a what time frame are you on right now on
I'm
this
on
chart?
4 hour.
Okay, go to like 15 minutes.
15
And then just
minute.
turn off all the indicators. Just turn off all the indicators so we can just see the naked chart. Okay. And then you see how even okay, so go to you see that the little pullback that we just had on before that up move?
Right here.
That down move, right? Yeah, exactly. That down move. So to forecast the price up, what you need to do is pull the standard deviation from that low,
To the previous high.
not to the high, but to the manipulation high. So you'll grab it there, and then you'll pull it to that high. So your 0 and 1 should be. So your zero should be at the bottom, and your 1 should be at the top.
Let me get a clean chart. Hold on. Whatever this is. So let's say, for
Shit.
example, here.
Is that shit glitching, or is it me that's tweaking? Oh, okay. And you don't have to like stretch the fib out. You just draw the fib to just click it there, and then put your 0. No, not to the swing high. It's not like a fib. It's not like a fib. So you're gonna go to that low to the manipulation high. So whichever the move, you see that little wick over there? No. Go a little more up, more.
Oh, the previous.
More. Right there. Yep, right there. And you don't need to have it cross the whole thing. Okay. So those are your projections now. And then look at your structures on the previous. Go look at your structures on the left. Line it up. It will be all the key levels. You can go to the higher time frame and look at it too. Okay, those are the projection levels, and you can see it. Go more left. Just follow the levels.
I mean, so far it's good. It's really good. Like right there, there's a
Exactly.
so
those
reversal
will be your
signal.
projected level. Exactly. Those will be your projected levels that you can TP. And I like to target 2.5.
That right there is the top of the wick, pretty much. That negative 1.5. And then let's see. That's the top of that wick, pretty much.
Why do you have 5 on it? Do you have a 5 on it?
Negative 2.5, negative 2, negative 1.5.
Okay.
That's pretty cool. I'm definitely gonna look into that. Pretty cool strategy.
So you can do it the other side too. So if you have a manipulation high to the manipulation low, then you can also pull it, from that low to that high. And then you can forecast the projection to the downside. And it will always line up with your order blocks, POI, and things like that.
That's nuts, man. I'm gonna start watching some videos on that, on the standard deviation. That's pretty cool stuff to know. Yeah. Alright guys, that is it for me tonight. Thank you for joining us. We went over NAS, we did gold, we did US30, and then we did Euro USD. NAS, we identified a few key levels for us to play out. Gold as well, we identified a fair value gap that's currently developing right now, so it should be closing up within about an hour and some change. Let's see what the level is. So based on that, we're looking at about an hour and a half for that daily fair value, that 4-hour fair value gap to close, in order for us to start looking into that for potential entry. We also identified US30. US30, we're looking at in the lower time frame in the 4-hour, short at the at the 32759.25 level. Looks pretty damn good. All the other bias also lines up with it as well. 4-hour, 8-hour, 12-hour, daily, weekly. We are in a downtrend. We are in a bearish position for that. So that one looks pretty fucking sweet. So definitely have your alert set out for that. And keep an eye on those points of interest. We'll be here at the same time, same place, next Saturday, 7 p.m. Let's go over the charts, watch your points of interest this week. And hopefully you guys have a profitable week. And have fun on the charts, man. Have fun. Thank you so much, guys.
All right, boys. I'll catch you up with you guys next week.
Thank you, Jay. Thank you for joining us.
Yes, sir.
Yes, sir.